Hello everyone. Can you confirm that the sound and the image are okay? Can you confirm that the sound and the image are okay? Can you confirm that the sound and the image are okay? Okay. So let's go. Hi everyone. Can you confirm that the sound
finally speak with you?
Image
I think it's been 3 or 4 months that we didn't do a live. So there is this live today. There will be another live next week. Today we are speaking about how we can farm with Jarvis. So first we're going to define a bit what is farming and what are the different models.
Confirm
and then of course we are finally speak with you, see different strategies 3 or 4 months that we didn't do a live. And next week we're going to speak live about the roadmap. There will be another live next week. Today we are speaking about how we can farm with Jarvis. So first we're going to define a bit what is farming and what are the different models.
Confirm
and then of course finally speak with you, see different strategies 3 or 4 months that project. And next week we're going to speak live about the roadmap. There will be another live next week. So today we are going to aiming at strategies how we can farm with Jarvis. So first we're going to define a bit what is farming and what are the different models. Educate them, of course. Finally, speak with you, some of different strategies for the project. And next week we're going to speak strategies, roadmap, bribes, and live next week. So today we are going to aiming at strategies how we can farm with Jarvis. Some first we're going to define a bit what is farming and what are the different models. Educate them, of course. Finally, speak with you, some of you like project. And next week we're going to speak strategies, roadmap, bribes, and educating yourself. So today we are aiming at strategies, bribes, some first we're going to define a bit of new live and educate them, of course. Finally, how we can some of you like project. And next week we're going to speak strategies, roadmap, bribes, and educating yourself. So today we are aiming at strategies, bribes, first is farming, I will define a bit of new live and educate them, of course. Finally, how we can some of you like project. And next week we're going to speak strategies, roadmap, bribes, and educating yourself. Today we are aiming at strategies, bribes, first is farming, I will define a bit of new employees and educate them, of course. Finally, how we can some of you like project. And next week we're going to speak strategies, roadmap, bribes, and educating yourself. Today we are aiming at bribes, employees farming, employees and educating them, of course. Finally, how we can some of you like project. And next week we're going to speak strategies, roadmap, bribes, and educating yourself. Today we are aiming at bribes, employees farming, employees and educating them, of course. Finally, how we can to make again the bribes today we are Okay, now it should be okay. We'll wait for you to confirm that there is no more echo. Okay. So it was not the most important, so let's keep going. Let's not repeat everything, and I see that most of you are French, so you're gonna have the French version after. So the summary that of what I said, I mean, what me and my eco said, is that farming is basically distributing shares or tokens to attract both users and service provider. And at the beginning, they just come for the money, but you hope that they stay for the value. The user will stay because you provide a good service, and the liquidity provider will stay because they make a living with the commissions and so on and so on. Okay, so who pays? The token holders. So basically, when you distribute a token, the ones who are suffering the most are the investors, because obviously there is a selling pressure. Let's be honest, most of the people who farm, they do not keep the token they receive. They just want to sell it to buy something else. They want to buy ETH, they want to buy the same token they farm with. So the investors, they are the one losing money. But also the service providers, because service provider mean to provide most of the time liquidity. And as you all know, when you provide liquidity, it comes with a risk. You have the impermanent loss risk, of course, because you receive also the token, you are damaged by the selling pressure. And it is an opportunity cost because you allocate your capital to a specific farm. And maybe you would have done better if you were doing something else. So, two examples. This is a token ellipsis, which is basically a token that is used to farm and dump. And you can see that the price performance has constantly been down. Of course, sometimes there is a small up, but every time the selling pressure comes back. You have the same with Curve, even though Curve may have more upside because of the curve wars and so on. We can clearly see that there is a big selling pressure. Of course, there is a bear market that came in the meantime, but yet a lot of people are farming and dumping the Curve token. But it's not always the case. We're going to speak after about Velodrome. So as you can see, Velodrome, there was, of course, a lot of dump, but at some point, they found some equilibrium, and actually now their token is going up. Alors, we will see after that it's not just because they found the secret sauce, it's because they are helped a lot by the Optimism Foundation. Here you have Wion Finance, which is one of the tokens who created the most insane farm in 2020. So yes, it went incredibly low compared to the top, but compared to the initial farming offer, when basically the token was worth zero, we are still very much valuable. Now we are around $10,000 for one token, and we started at zero. So even if when you found it, you received it when it was worth $1 or $100, you are still in a huge profit. So not all the tokens are constantly going down. It depends, of course, on the product, the community, and the tokenomics of the token. How do we calculate the yield? It's fairly easy. We take the token, the value of the token that a program is distributing. So for example, they distribute $10,000 worth of token. And you divide by the total amount deposited that we most of the time call the TVL for total value locked. So it's easy. If you receive $10,000 of token per year, and if the TVL is $100,000, then the yield, the APR, is 10%. Be careful that sometimes some farm, they show you the APY, which is not the APR. The APY, it's assuming that you reinvest and you auto-compound. So you take your profit almost every day, you reinvest them in the pool, and like that, you grow your balance and you grow your profit. So you have to check the APR, not the APY. So you can see that it, of course, depends on the price of the value of the token and on the TVL. So for example, here, this is Dots, which is a product we're going to speak about after in the strategies. And for example, you have those two first farming programs, and you can see that the APR seems very attractive. The first one pays 300% per year. So you can say, wow, it's very great. I will just deposit tons of money there and I will just make a lot of money. But there are two problems. So the first one is the TVL is quite low, $36,000. What does it mean? It means that if you deposit $36,000, the APR will be divided by 2, because remember, you divide by the total value deposited. So if the total value deposited doubles, then the yield is divided by 2. And the same thing for the price of the token. If the price of the token is divided by 2, obviously the yield is also divided by 2. So imagine the price of the token divides by 2, the TVL increase by 2, so basically the yield can be divided by 4. So the other problem here is you need to do your due diligence, because it seems that this token is actually kind of shady, kind of scammy. And this is why it doesn't attract liquidity, because people don't want to actually lose their money by putting their assets there. So don't be too greedy when you see a high APR. Try to understand why it is high. Is it because the TVL is small? Is it because the project doesn't interest investors and therefore could be risky, and so on and so on? Okay, this was an introduction, so everybody understands a bit some of the vocabulary and the concept of farming. Now let's start discussing something more interesting, the bribes and the voting power. So it has been pioneered by Curve. Curve invented two things, the gauge system and the VE model. So let's start first with the gauge. So basically a gauge, it's easy to understand. It's a voting system to allocate a certain proportion of a token to a pool. So let's take an example. We have here 3 pools, the pool A, the pool B, and the pool C. We have here the token holders who can vote for the token emission. So for example, every week, there is a certain amount of token which is created. This is what we call the token emission. For example, it could be 100,000 of a token. So what the token holders will do, they will vote with their token for the gauge. So gauge green for the pool green, and so on and so on. And at the end of the week, we check how much votes each of those gauges have received. So for example, the gauge A received 50% of the votes, which means that the pool A will receive 50% of the new token. So the pool A will receive 50,000 tokens, since every week we emit 100,000 tokens. So it's fairly simple to understand. The idea of the VE model is you can lock your token for a certain period of time in order to gain power. So we are winning in the case of Curve, and most of the projects that are using the same system, you are winning a boost power and a voting power. So we are going to define them after, but something that you have to understand, you can decide for how long you lock your token. The longer you lock them, the more power you acquire. But, and this is the interesting part, as soon as you have acquired power, you don't keep it. Actually, at every block, your power is decreasing to the point where at some point your power will be 0. So for example, if you have locked for 2 years and the maximum period was 2 years, and you don't do anything and you just wait, after 1 year, you have already lost 50% of your power. And after 2 years, you have almost 0. And after the 2 years, you have 0. So the power decays. So you can, of course, regain the power that you lost by extending the lock period. Let's say that you have locked for 2 years, so you have the maximum power, and after 1 year, you have lost 50% of it. But for some reason, you want to regain the maximum power. So you can add 1 year of lock like that, since you had still 1 year to wait. If you add 1 more year, it's 2 years. So you basically relock for 2 new years, and boom, you regain your power. So by extending the period, you regain the power that you have lost. So as I said, there are 2 kinds of powers, the boost and the votes. So the boost is quite interesting, a bit technical to calculate. So you just have to understand basically the concept. And of course, all the applications that protocol using those boosts, they help you to figure out the quantity of token you need to access the maximum boost. Let's take the example of the pool A, which was receiving 50% of the token emission. So what you have to understand is that liquidity provider, to get boost, they need to get the token, so the VE token. So they buy the token and they lock the token. And again, the more they lock it, the longer they lock it, the more power they have. Let's say that we have three liquidity providers, LP1, LP2, LP3, and all of them have 33% of the liquidity. The two first liquidity providers, they have no boost at all. And the liquidity provider number 3, he has the maximum boost. So in the case of Curve, when you have the maximum boosts, you win 2.5 times more reward than if you have no boosts. So the LP number 3 will win 16.5% of the token. Why? Because there is 50% of the token that goes to the pool A. So the LP token number 3, the liquid product number 3, he will win 33% of those 50%, which is 16.5%, because he has the maximum boost. But the LP1 and the LP2, even though they have also 33% of the liquidity, because they do not have a boost, they will earn 2.5 times less than the LP3. This is why they will only get 6.6% of the token. So there is token missing, because if you do 6.6 plus 6.6 plus 16.5, you don't get 50%. The difference goes to, of course, the one who has, is shared between LP with a boost. In our example, the only one with a boost is the LP3. So actually, the LP3 he will win 16.5% plus basically the 10%, so 20% more, because this guy and this guy lost 10%. They don't win the 10%. So this is how it works. So it's interesting. You basically, if you're a liquidity provider, you want to have the maximum boost in order to win as much reward as possible. Then you have the voting power. So the idea of the voting power is that, of course, the more token you have and the more power you have. But what is interesting for us is that people can actually accept bribes. So you can basically corrupt people with voting power. Like in democracy, you can corrupt people to vote for you. So, for example, let's say that the token holders, they receive a lot of bribes. Project, they don't like the word bribes, so you will maybe see voting incentives. So they receive a lot of money, cash incentives to vote for the gauge A. So what will happen? The gauge A, instead of receiving 50% of the vote, will receive 80%, because you are paid to vote for that. And you are a rational human, so you go where the money is. So you vote, people vote for it. So the pool A will finally get 80% of the emission. And as a result, you can see that the liquidity provider, they win way more. The liquidity provider number 3, before he was winning 16%, now he will win 26%. So who is paying the people who vote, who hold the voting power? Who is bribing them? Liquidity provider. Liquidity provider, they have a direct incentives to increase their reward. So they can say, instead of doing nothing and just earning 60.5%, maybe I can reinvest a bit of my profits to incentivize people to vote for the gauge A. And if I do it and I'm successful with my bribing campaign, I will receive more votes, and so I will win more money. So obviously, if I win now 26%, I have to remove the cost of my bribes, because maybe I paid the liquidity, the voter, in order to get the reward. So I won't win exactly 26. But if it costs me 3%, I will win 23%, which is still better than the 16.5%. So this is the genius of the idea, where it's not about the lock and so on. This is an extra cool feature of the tokenomics. The cool thing is that you can ask people to vote for a gauge, and everybody is winning. Now, when I mean everybody, remember, there is one person losing. It's the people holding the token. Because remember, the farming, it's at the expenses of the investors and the token holders. But the liquidity provider, they are happy because they win more yield. And somehow, the people who have invested in the token and who can vote, they are also happy. Because yes, maybe the price of their token will go down. Because maybe the liquidity provider, they will dump the token. But in exchange, they receive money for their votes. So actually, they generate additional yields. For example, here you have the Velodrome application, which is an AMM on optimism. And you can see here something called the voting APR. Do not confuse voting APR with the traditional APR that you used to see. The voting APR is if you hold the Velo token, and if you have locked it, and you have voting power, and you vote for this pool, you will earn 60.65% per year. So we can see here that the bribes are $3,400. They paid 53 USDC and 60,000 of this token. I don't say this is a good pool. I don't know them, just for the example. So when people will vote for this pool, they will share a part of those $3,400. And it equalizes to 60% of APR. You can see here who voted. The number of votes is 2.3 million. So this pool has received 2.3 million of votes. And those votes are rewarded with 60%. But as you can see, the APR is going down because I have sorted it. So if you vote for this pool, you will win only 35%. So what is supposed to happen over time? Because here it pays 60% to vote for this pool, what you could expect is more and more people voting for the pool. But if there is more votes, then the APR of the voting will also decrease. It's like the liquidity mining before. The bigger the TVL, the lower the yield. Here it's the same. There is no TVL, it's votes, but it's the same. The more votes there are, and the lower the APR. To the point where they will reach a certain level, and most of the voting APR will trend towards the same price, maybe 35% APR, which means that the people who are holding Velo token and they are voting for it, they earn an additional 35% per year. So it's always a good strategy if you like a token of a DEX like Velodrome or so on, to don't forget to lock it and to vote for it. Obviously, when you lock it, you can't sell it. So it comes at a problem, at an expense. If the market is crashing, you are basically blocked. It's not the case for Velodrome. This is just a small information, but on Velodrome, you lock your token into an NFT, you can transfer the NFT, which means that you can sell the NFT. And there is actually a secondary market for that. But we are speaking about it after. Same thing here on another DEX. This time it is on Arbitrum, and it is a DEX solid lizards. Well, the UI is a bit different, but the APR is here. So you can see that if you vote for this pool, the people holding the SLEAZE token, who have locked the SLEAZE token and who are voting for this pool, they will receive 300% APR. Obviously, again, many people will join, will vote for this pool, it will lower the APR. It doesn't mean you're gonna win 300%. So all the APR will again tend toward the same number. You can recognize here our GRT. The people who vote for our GRT, they will receive 30,000 GRT, which equals at the time of the screenshot to a 322% APR. Another example here, you have ... on BNB. The voting APR for the GRT BNB is 32%. There was $3,000 of bribes. And the last example, because it's a bit different, maybe you have heard about Warden, which is a product done by Paladin. So the main difference between, the only difference between Paladin and all the other systems that I showed you before is that you have a fixed APR. So you know that you can vote, and whatever the amount of votes is, you will win the 23% APR. How does it work? It's fairly simple. They can only receive a maximum number of votes. So obviously here, for example, they needed 4,000 votes, and they say, okay, we will pay X thousand USDC, X 100 USDC to get 4,000 votes. And this will equal to 23% APR. So the cool thing with Warden is that you know already in advance how much you're going to win. Your APR won't get diluted. Very practical. Okay, so now let's speak about the VE free. Because I explained you that with Curve and most of the dexes, you lock your token, you choose a period, and locking the token gives you a boost power and a voting power. But it comes, as you understood, with some issues. When you lock your token, you can't sell it. And more tokens are being emitted every day. So you are getting diluted. There is a selling pressure, you get diluted. The bribes are not super efficient. Because remember when I told you, you expect humans to be reasonable, so they will vote where there is money. It's a sad truth. People, they will not vote for the best pools. They will vote for the pools that pay them the most. Again, pure democracy. Never vote for the best politician. We vote for the one with the best promises. Or the worst, the less worst politician. Here it's exactly the same. So the VE free model, it's André Cronje, who launched Wi-Fi, who came up with it. And the idea is interesting. The model was forked to be improved because the first iteration were not very good. But let's say that I will explain the initial idea. So first, the tokens are locked in an NFT, which means that you can transfer them, which means that you can sell them. So you are not locked anymore. Of course, you need to find a buyer, but provided that you find one, you can exit your position. Of course, because you sell something which is locked, you always sell it at a discount. No one in their right mind will buy a locked token at the market price. But still, the interesting thing here is that the more tokens are locked and the less emission there is. So the emission of the token is directly connected to the number of tokens locked. So this is good because it incentivizes people to actually lock their token. Because if you buy a token and you lock them, you know that there will be less emission, which means less dilution, which means that if you are less diluted, you keep your power because there is less newcomers. Another way also to fight inflation and dilution, it's something called the rebase. So every time there is new tokens which are created, the NFT holders every week, they can claim a rebase. So how does it work? You have bought a certain amount of token, and every week you can claim a rebase to increase your number of tokens. By doing that, you fight a bit the inflation. So let's say that the inflation is 100% per year. Thanks to the rebase, maybe the inflation for you will just be 50%. So of course, you can't fight 100% inflation. It won't work, but it reduces the inflation. So those two mechanisms help token holder to keep their voting power, boost power, and so on, even though there is new token emitted. While with Curve, because there is new token printed every day, but you know that you are losing, you are getting diluted. Another thing which is interesting with the VE model, it's the bribe system. So when you are a liquidity provider, you can decide to receive a fee or to receive token emission. Most of the people, of course, they will choose to receive token emission because the fees are very small, unfortunately. Maybe with fees, you will win 5% per year. With the token emission, you can win 10, 20, 50% per year. When LP decides to get token emission, what happened to the fees? The fees are actually added to the bribes. So this is pretty cool because it means that if you have a pool which generates a lot of volume, the pool generates a lot of fees. And those fees are reinvested into bribes. So the NFT holders, they actually will vote for those pools. So those pools will receive more emission. And because they receive more emission, the APR will be higher. And so it will attract more liquidity. And so it will generate more volume, and so on, and so on, and so on. So as I said, this was the initial idea. Not all the fork of Solidly, because the name of the first exchange was Solidly, use exactly the same thing. They did some changes and so on. So it's you have to check the exchange you work with what did they change, what did they didn't change, and so on. I said before that we were speaking a bit about Velodrome. So Velodrome is a fork of Solidly, so using the VE33 model on optimism. And you saw before the price, it went crazy high. Why? It's because Velodrome, they are actually helped by the Optimism Foundation. They received and they keep receiving very large grants because, let's be honest, right now Optimism, they are the biggest thing. TVL is huge, volume are huge, and so on and so on. So what do? They actually incentivize people. So if you buy and if you lock Velo, they will send you a bonus the week after. Of course, the more people buy and lock, and the smaller the bonus will be. But historically, I saw that the bonus ranges between 20 to 40%. So it's incredibly powerful. Imagine you buy $10,000 of Velo and you lock them. The week after, if you are lucky, you will receive $4,000 of OP token. So it's like if you have bought the Velo at a 40% discount. It's what we have done with Jarvis. The company has bought $10,000 of Velo, and we received, back then it was 20%, we received $2,000 of OP. And then the protocol bought, I think it was $20,000 or $30,000 of Velo, and we received 30%. Yeah, it was $30,000. We received 30% of bonus, so we received $10,000 of OP. So it lowers the entry price. And then what do you do with those OP? Well, you can sell them to buy more Velo, to lock them, to receive more OP, and so on and so on and so on. So you can create an infinite loop. And this is what creates the value of Velo to go up, because basically many projects or people, they dump the OP they receive to buy more Velo. And why they do this? Because like that, they increase their voting power. And maybe they are protocols, maybe they are liquidity providers, and they want to bribe, but also to have a lot of voting power. Also, Velodrome helps with the bribes. If you bribe on Velodrome, Velodrome will match your bribe with 25% in OP. And there is also a bribing bonus. If you have locked Velo, in the same week that you lock the Velo, if you have deposited a bribe somewhere, your bribe will get even more matching. I think it is 50%. So basically, Velodrome is getting very good and very well thanks to the OP that they receive. So what is a flywheels? So in the case of the bribing and the voting system, a flywheel is a bit like infinite wheel, the snake that eats its tails. So for example, it's the case where you bribe $1. And when you bribe $1, if you are a liquidity provider, you will receive emission. And the idea is that you're going to receive more than $1 of emission. So you pay one to get more. And then with the extra emission that you receive, you reinvest them into new bribes. So an example, let's say that you put $1 of bribe, you receive $2 of emission, you reinvest, let's say $1.5 of bribes the week after. So you're gonna receive $3 of emission. Then you reinvest $2, and so on and so on and so on. This is what we call a flywheel. There are many different flywheels in DeFi, but in this case of the bribing and voting mechanism, this is what we call a flywheel. So of course, if you are a liquidity provider, a flywheel only works if you control a huge part of the liquidity. For the example where you bribe $1 and you receive $2, it's actually not true. You bribe $1 and all the liquidity providers will receive $2. So for you to actually create a flywheel, you need to control at least 50% of the liquidity. Because if you control, let's say, 80% of the liquidity, if you deposit $1, you're going to win 80% of the $2. So you're going to make a profit of 60 cents. And this is why you need to be a big liquidity provider, or you need to find other people to create a group and to bribe together. This is basically what we do. At the beginning, I was the only one bribing on dot. I was bribing the GRT ETH pool. So I was the only one depositing bribes, receiving emission, but because I was maybe 10% of the pool, I was not making much money. And all the yield was actually going to other liquidity providers. So we started an initiative in the Discord of Jarvis. We called it the ... flywheeler group. So what I asked the participants is to bribe with me. So at the beginning, we were 3, then we were 5, now we are 10, and we are growing. So what we do, we deposit bribe every week, almost at the same time. And right now, our group controls 98% of the liquidity, which means that last week, $1 of bribe was controls $2.2 of emission. So our group received 98% of those 2.261, which means that we spent $1, and for each $1 spent, we received $2.2. And of course, the $2.2 that we use, what do we do with it? We reinvest it the week after in bribes. And this is how we have created the flywheel. So we are organizing ourselves with this fancy spreadsheet. If you are interested, you have all the participants. If you are interested to join us, just come on Discord. You ask how to do and so on. There is a tutorial that has been done by a community member and so on. I'm very happy with the results. We have increased the liquidity by 8. The yield is consistent. Now we have 160% APR on the pool. So every participant is happy. Okay, let's finish this slide with the strategies. So first, when you participate in a strategy using the Jarvis ecosystem, you can do 3 things. The yield that you get, you can reinvest them in the pool. If you do this, you will win more money because you auto-compound your profits. But it's an independent attitude. Like I won't say egoist, let's not insult you, but you don't provide that much value. You provide value because you bring liquidity, so it's good for the protocol, but that's all. If you actually want to provide more value to the protocol, most likely it's because you are a GRT holder. If you are not a GRT holder, you don't care. But if you want to actually help the protocol, there are a few things that you can do. The yield, the emission that you receive, part of it, you can actually keep it, lock it, and use it for voting, for what you're going to vote, but for the pool that you join. If you invest in a pool, you want the yield to be consistent or to increase. Remember that the more votes we have, the more yield we get. You can also use part of your profits to reinvest in the bribes. This is the thing that brings the most value. Because if you let's say you win $100 per week, you keep $60 for you, and $40 you reinvest them. You can reinvest them to lock and to vote, but with $40 you won't have a huge voting power. But if you reinvest them into bribes, actually $40 of bribes will bring more voting power than if you vote with $40. Sometimes it's 2 times, sometimes it's 3 times, and so on. So if you participate in one of the Jarvis strategy and you want to provide value to the protocol and you want to help basically the protocol to grow and the yield to be maintained, don't play solo. Of course, take money for you, but reinvest a bit in the bribes. The more bribes we have, the more vote we got. So saying that, let's go to see the different strategies. So first one is, of course, use a GRT. So we have GRT ETH pool, GRT BNB pool, and so on and so on. I already have explained that we have a group of flywheelers on dot dots. So this is why I call them the GRT, ETH, GRT, BNB flywheels. So the idea of our strategies is, of course, to deposit GRT and ETH or GRT, BNB in a pool. But if you want to participate to the flywheels, what you have to do is you deposit bribes in GRT. Let's say $100. In return, there is more votes. So you are getting, because you're a liquidity provider, emission of the token. For example, you win $200 of emission. You sell the $200 for GRT. So what's happening? You pay someone $100 in GRT. Most of the time, they will sell it. So they will create a $100 selling pressure. But then you buy back GRT with $200. So 100 minus 200 plus, I guess you all know that it makes plus 100. So this has a positive effect on the GRT token because it creates a buying pressure. And because you participate to the strategy, you also generate yield with your GRT and you increase the liquidity of the token. So those are all the value that you bring by participating to the flywheels. Of course, there are downsides. Because those pools are 50-50, you have a huge impermanent loss if the price of the token got very high. But if you are lucky and the price of GRT and BNB and GRT and ETH grows together, then you will have a very tiny impermanent loss, as you know. Impermanent loss are very big if one of the tokens is skyrocketing or just going to zero. But if they are somehow correlated, it's okay. And you have the risk of creating an echo chamber. On dot dots, as I told you, the group controls 98% of the liquidity, which means that there is just 2% of the liquidity provider who do not participate. So when we actually buy the GRT, we buy the GRT of the participant. So we buy the GRT between us by giving to our people the emission. I mean, we sell the emission for more GRT. So people, they got more ETH, but less GRT, or the price goes up, but it's always better if, of course, we have more participants. I think it's good when you have something like 80-20, like 80% of briber and 20% of people who do not bribe. What are the advantages of this strategy for Jarvis? No inflation. We don't need inflation. We don't need to take our GRT to pay for the yield because basically the liquidity providers are paying for their yields. So we move the inflation to the liquidity provider, to the community, basically. So this is why it's a community effort. You pay for your yield. You pay $100 of GRT to get $200 of yield. Then it creates a buying pressure because, as I explained before, you pay the bribe in GRT, then with the emission, you sell for GRT. So overall, it's less selling pressure because there is no inflation. More buying pressure, so it's kind of beneficial. So if you are a GRT holders, if you are not too much afraid about the impermanent loss, and if you want to help us reducing, to have almost zero inflation, increasing the liquidity and generate yield with your assets, then this strategy could be for you. And if you want to receive the help, again, you come in Discord and all our members will help you. Where you can do this strategy? For now, you can do it on dot dot, which is actually built on the top of ellipsis with the GRT BNB pair. You can do it on solid lizard, GRT ETH. This is on Arbitrum. There is no group formed yet, but we are going to form a group this week. Soon, there will be also one pool on Tena, one pool on Velodrome on Optimism, and, finger crossed, one pool on Aura on the top of Balancer on Polygon. This could be more interesting because, of course, it will be an 80-20 pool, so less of impermanent loss, less capital needed, and so on and so on. So an example how to participate on dot dot, you go on the website dot dot, you go on bribe, you look for GRT BNB, you put the contract address of GRT, you put the amount, you first approve, then you deposit the bribe, and you come in the group and you write down in the spreadsheet what you have done so we can keep track of everything. Where can you get yield now for JEuro? So on JEuro, there is no flywheel. It's too complicated to do this on the JEuro. So those are the stable pools. So we have many JEuro with AJEuro on Velodrome, Solid Lizar, and Balancer. So on Polygon, Arbitrum, and Optimism. We have the JEuro S-Euro from Synthetics on Velodrome. And we have the JEuro par from Mimo on Polygon. So as I explained before, if you really want to help the protocol and if you participate to the JEuro pools, you should use part of your yield to bribe. So on Velodrome, for example, you go on bribe, you select the pool, so for example, JEuro S-Euro, and here you select the token with which you want to bribe. Here I took the example of JEuro. This address has 600 JEuro, so I can deposit 250. If, for example, I have generated $700 of yield this week. You don't need to put JEuro. You can also bribe in Velo, in ATH, in OP, whatever. Same thing for Balancer. If you are a LP on Balancer, you have to go on tetu.community. Again, on Discord, we explain everything. So you look for the pool, but here it's the 2BRL pool. It's us, but the €2 is a bit lower. And you just add a bribe. So adding a bribe is here. Then you have to check to select the correct gauge. So for example, if you're on the par gauge, the par pool, and you want more yield, you go on par JEuro and you deposit your bribe. And then you will see your bribe here. I mean, sorry, here in my bribes. Cool strategies. Borrow to farm. This is my favorite one. So when you want to farm with JEuro, you have to buy JEuro, which means that you have to buy euro, which means that you have to sell something to buy euro. So you have an exposure to the price of euro. And maybe you don't want. Maybe you have ETH, maybe you have USD, and you don't want to have an exposure to the euro. So the best things to do, and it's what I'm doing, is to borrow. So the idea of borrowing is simple. Let's say you have ETH, you borrow JEuro with your ETH, and then you go to farm with the JEuro. And like that, you generate yield, and you keep your exposure to the ETH. And if the price of euro goes up, or if the price of euro goes down, you won't have an exposure. You don't really care. Of course, you care because if the price goes up against ETH, at some point you can get liquidated. But this is, you have to manage your risk correctly. This is why you can also borrow with USDC, where you have less chance to get liquidated and so on. For the euro that I mentioned, you can actually borrow the euro everywhere. So the par, obviously, you can borrow it on mimo.capital. And you can even get extra yield because you can, for example, put the Estimatic as a collateral. Estimatic is Matic that generates, I think, 4, 5, 6% per year. So you can have a collateral which generates yields and you borrow. So somehow you borrow for free. You can, of course, borrow JEuro on Jarvis.money. We don't accept staked Matic yet, but we will have staked ETH, staked Matic. So you will be able to be paid while you borrow. You can also borrow on 0VIX. I will show you it after, where here you have extra yield paying the 0VIX token. You can also borrow AJEuro on Angle Money or on Ethereum on Euler. I don't remember how they pronounce it. And you can also here win extra yields because again, you can borrow against STETH, Estimatic, and so on. Well, if you borrow on Ethereum, you have to bridge. But if you know what you do, this is a good strategy. So this, for example, is Jarvis.money. Here it's a loan in USDC. So you see that I have deposited 13 USDC, which is equal to 12.87 JEuro. I have borrowed 11 JEuro, which is equals to 11.6 USDC. My health ratio is 117%. I will get liquidated if my health ratio falls below 105. This is the current price. And if the price falls to 0.84, so 10% from here, I will get liquidated. I have paid the origination fee of 0.5%. There is no interest. You just pay when you borrow, and that's all. And if I'm getting liquidated, I will have to pay a 2.5% fee. We have added today more collateral. So now you can borrow JEuro with Bitcoin, with Canadian dollar. Let's say you are Canadian, you want to have only an exposure to the Canadian dollar, well, you can. You borrow JEuro against your jCAD. Same thing for the Swiss franc. Same thing from the gold. If you are, I would say gold, I wanted to say gold digger, but sounds a good term. If you are a gold enthusiast, you can deposit gold, borrow JEuro. So you have an exposure to the gold and you generate yields and so on. Matic and so on and so on. So of course, like I said, we're gonna add collateral that generates yields. So the famous LSD, liquid staking derivative. So we'll have ST, ETH, ST, Matic. On BNB, we're gonna have the BNBs and so on and so on and so on. The contracts have been deployed today, but it's not yet in the UI, so it will be in the UI this week. And this was Polygon, by the way, but we'll have the same on other networks. This is 0VIX, where you can borrow JEuro. So you can see that borrowing JEuro is expensive, actually, 6%, but you are compensated with 20% APR in VIX token. And when you deposit, for example, Matic X, it's a Matic that generates a yield, 4, 5, 6% per year. You are also paid 3.79% to deposit them. So you can deposit Matic X, win money with the Matic X, win an additional 3.79%, borrow JEuro at 6%, win an additional 20%, and then invest the JEuro in another strategy. Well, the only problem here, it's written, it's pre-mined. So actually, the APR here are all fake. So the token doesn't exist. You will receive an IOU, so a pre-mined token. And so how do they calculate the APR? Well, they did a fundraising. They sold their token at a certain price. I don't remember which one, maybe 3 cents or 30 cents. I don't remember. And so they assume that they use this price for the APR. So they said, look, we sold the token at 3 cents. So the APR is calculated with a 3 cents token. So it's interesting to use the 0VIX only if you want to accumulate the 0VIX token. What is the use case of the 0VIX token, you may ask? It will be like the VE model of curve. So if you have the 0VIX token, you remember the gauge system. So here, basically, gauges are attached to each asset, either asset to borrow or asset to, let's say, a deposit. So for example, if you have accumulated a lot of 0VIX token, in the future, when their token will be live, you will be able to use your voting power to vote massively for the JEuro deposits. So the JEuro deposit will receive a high real VIX APR, and you will be able to profit from it by depositing your JEuro. So the strategy now is more accumulating a token that will help in the future to allocate yield between supply and borrow assets. This was for stable pool. Now we also have non-stable pool. So for example, we have the JEuro USD yields. We have the JEuro MAI on Velodrome that we just launched yesterday, so it's still low TVL. We have the JEuro USDC on Solid Lizard, the JEuro USDC on Kyber that doesn't pay incentives, but only fees. But we are trying, I will discuss with them if we can get some incentives because the volume is very good here. Soon we're going to have also on Tina, Dot, and hopefully on other places. So none of those pools besides Kyber are concentrated liquidity pool. So the point of those pools is not really to increase the liquidity, let's be honest, because, if you trade with USDC on this pool, even if it has a decent liquidity, you will have a crazy price impact. Normal AMM, they are very bad for assets which are not very volatile. So what is the point? The point is actually to do cool strategies and to generate yields. Let's say you have USDC. You start with USDC. You sell 50% of your USDC to buy JEuro. And you deposit them into the pool, JEuro, USDC. So what you have done it's actually a long on euro dollar, and you get paid for that. So this is for traders. If you see a signal and you think that euro dollar will go up, you can, of course, buy euro, and you will deposit the J-euro, for example, in a J-euro par pool. But the J-euro par pool will pays something like 10% per year. The Euro-USD pool, I think right now it pays something like 80% per year. I mean, Euro-USD and so on, they will always pay more than a stable pool. So the idea here is that if it breaks up the range, so as I said, you sell your USDC for J-euro, you put them here, and you exit at some point. So you have earned money because you have bought J-euro. So you have made a profit on the price movement. You have been paid for that. And the best thing is that if you are wrong, maybe the yield that you are making will compensate for your loss. Of course, you can do the same thing if you want to short euro dollar. So this time you start with euro, J-euro. You sell for USDC, you deposit in the J-euro USDC pool, and you short euro dollar, you have a short exposure to euro dollar, and you get paid for that. You can also do a bit more complicated things. You start with USDC, you borrow J-euro, you sell half of the J-euro for USDC, and you deposit them in the J-euro pool. What you have done is a leverage short on euro dollar. Why leverage? Because you have your USDC and you leverage from the USDC to shorts. So you keep a USD exposure and you think that the dollar will go up. So basically, here you buy more dollar. So you are short euro, long dollar, and you are paid for that. And there is no leverage long because unfortunately for now, but it will change soon, you can't borrow USD with a J-euro collateral. We have also wrapped ETH J-euro pool. So it's the same system as USDC. You have on Velodrome and on Solidlizer and soon on Tena and on BNB. Same thing, you can start with wrapped ETH. You sell half of them for J-euro. And this is good if you think that ETH euro will go down. If you think that euro ETH will go up, it's ETH euro. You start with J-euro, you sell the J-euro for ETH, and so on. And same thing as before, if you want to leverage your ETH and get paid for that, you borrow J-euro with ETH, you sell half of it for J-euro for ETH, and you put it in the pool. And again, if the price goes up, then you make more profit. Of course, it's directional trading. So if it goes the other way, you lose money, you can be liquidated and so on. We have also the yield on JBRL. So we have those pool on Polygon, BNB, and so on. Why do I mention them? Because maybe you're not interested, you are more in for the euro. But first, it's always interesting to check the BRL USD or the BRL euro charts. Because BRL was actually not that bad in terms of speculation for almost a year. So it's actually a good idea to farm in BRL rather in USD. But again, this is if you want to take a directional bet. But what you can also do, since you have J-euro or USD, you can borrow with the J-euro collateral, you can borrow JBRL, and then you can farm with JBRL. Like that, you can enjoy the yield on JBRL, which historically has been always above J-euro yield because there is less people. Yet you keep your exposure to J-euro. We have also the BRL USD yield on Balancer and soon on Tena and Dot, and the wrapped ETH BRL on Tena and also soon on Dot. That's all. So I hope that you have understood everything, the strategies, how to participate with the bribing and so on. And now, if you want to get into the practice, as I said, everything is on Discord. You come, you can ask questions, you can participate to everything, and to organize briber groups for the various different AMMs that where we have the GRTTH. So if you have any questions, feel free to ask them. Okay, so thank you for your time. See you on Discord. And for the French people, see you in an hour.